Good morning, everyone. Welcome to our Thursday morning trading session. Almost to the long weekend. All right, hang on here a second while I get you my monitor. All right, we're looking at the NASDAQ here. The market just opened up, and it looks like it was a relatively quiet open if we take a look here at the Eagle. As we suspected after yesterday's early rally, the market kind of hit the skids, spent a lot of time going sideways. No real progression, even though the market finished rather strong. They closed up shop, it looks like around here, around the 44.72 mark, and that's more or less where we've opened up this morning. So not much in the way of an opening gap that we need to deal with this morning. We'll let the dust settle a little bit before we get too caught up in finding a signal. The hawk showing us very sideways trading today. In fact, I'm starting to think that we could be in a big trading range today. So when the market gets toward the top end of this range, we'll see whether or not we can make a breakout or whether it's actually just going to flinch and fail. Or is that flinch and flail? All right, bad joke, I know. It's early. It's really early here. Although with the sun coming up so early now, and the birds, of course, with the sun, I pretty much wake up around 4:30, 5 o'clock anyway. Don't need an alarm clock, not this time of the year. Okay, so let's take a look here how they're going to respond now. We actually got a signal here on the Eagle. I've mentioned to you before that the Eagle is one of these tools that I will consider an early signal on. So what's happened here is the signal printed actually right here. It would have been nice to take this one on the hash mark. Why? Well, because if the market's going to turn at the top end of the trading range, well, the top end of the trading range is right there. We missed that signal, or I missed that signal, but we do get a chance on a second push entry. All the second push entry means is that we allow the signal to engage, and then we see where the current limit of the buyers or sellers are. And with a tool like the Eagle, it almost always will show you. Sometimes it will go a bar, sometimes it will go two, very rarely more than that. You can take a look here at all these signals that tripped because this market was so sideways, so choppy. You see the signal printed and then it turned. Printed and then it turned. Had you waited for a second push entry, you would not have been engaged in this signal, and you wouldn't currently be sweating this trade trying to figure out how you're going to manage your stops. Getting a little bit of a lower swing high now, which is interesting. And coming back with a red bar buy signal. Now we'll see whether or not this actually prints. No, it evaporated. Andrew says, so the Eagle signals are really too late. I'm not entirely sure what you mean by too late. Remember, the Eagle is designed to pick up trending signals. That's not to say that these signals won't reach their targets. So let's say, for instance, we took this trade. You always need to take the context of the chart into consideration. And a trade is not a loser until your stop loss gets hit, right? So When Stephanie was at Indicator Warehouse, we always had discussions about this because in Stephanie's mind, she would put the stop right here, and if the market didn't make a beeline there, the signal engages and then a retreat, she'd say, oh, it's a failed trade. And I would say, well, no, it's not. And she would say, well, sure it is. My stop got hit. I said, yeah, your stop got hit. My stop would be down here. So I'm still long. My trade has not failed yet. Right? So it's a matter of the context. Sometimes you can get away with a tighter stop. Here we've got a market which is trending better, right? We're obviously in some sort of uptrend. We've violated a substantial swing high. There's every reason because of this violation that we should expect another move higher. This is a trade where perhaps I wouldn't jam the stop right here, just in case the market, ticks 1 or 2 ticks below the low. But realistically, I put my stop somewhere around there. And there's a trade where the market had no trouble whatsoever. But the context is different. Right? Compare that with what we're seeing right now. You look at everything to the left of the chart, yeah, we're printing signals, but it's not, the trend is waffling, right? Uptrend here, a little bit of a downtrend portion. Uptrend, now the market's trying to turn over again. In fact, we do have a valid rule of 3 signal. So we have 1, 2, 3 signals against the hard edge. We've had our retest of the high and now the failure. So there's a chance that the market's going to try to head lower. Also, in terms of context, I would consider the time of the day, because it is so early still. And I realize this is new to many of you who haven't had a lot of screen time yet, but you're going to find that when the markets have a very strong day, it's usually followed by a day of sideways trading or a lot of choppiness, and you should be prepared for that. It used to be the markets would rally for a week, one bullish day after the next, after the next, after the next. Now we're lucky if we string 2 bullish or bearish days together. After that, the market kind of flops about a little bit. And I think that's what we're seeing now. We're seeing a flip-flopping market. And again, we kind of get that feeling. You look at your tools, a lot of yellow bars here in the hawk. The yellow bars, remember, are neutral. So they show us the neutrality in the market. They're all printing more or less the same latitude. Right? They're all printing around here, around the 44.81 mark. Here comes another one. Take a look here at the Falcon. Like we're pinched here between the primary resistance and the secondary resistance. So the market, a little bit of a bullish flavor. We're here into the more bullish side of the support and resistance suite. But still, look at that. That looks like a roller coaster, doesn't it? And the filter down here is broken up like a checkerboard. The trend line all over the place. I guess what I'm trying to say is you can't necessarily trade in a vacuum. You need to try to look at the chart as a whole. I think I've mentioned Ed Sequoia to many of you. He's one of these renowned traders. And what Ed likes to do, I don't think he prints off the charts anymore. But he probably has a monitor, and what he'll do is he'll pull up a chart and he'll go stand on the other side of the room, and he'll look at the chart, from 10 feet away, and then he'll decide, okay, the market's going up, I'm going to buy. Market's going down, I'm going to sell. Andrew says, regarding my example here, yeah, but that's huge risk, Andrew says. No, Andrew, it's not. The risk is contained here by my percentage amount. So whether I place my stop right here, pardon me, notice the risk amount, or whether I place my stop right down here, notice the risk amount. The risk does not change. Now I know you're thinking, well, Eric, there's no way I would ever throw 6 contracts on a trade like this. Why not? Why wouldn't you? Well, you would probably say, well, I wouldn't put the trade on with 6 contracts here because the stop is too tight. Oh, all right. Well, why would you place a stop so tight? You see, this is all about the psychology of trading, folks. We want to be right? We only make money when we're right. So how do we structure a trade so that we are right more than we are wrong? Well, the one thing I would suggest to you is don't strangle your trade. Don't keep your stops super, super tight. An example that I quote fairly often, and I need a new example because this is going on for about a year now since this happened, but a fellow who I was coaching who had a difficult time with this concept. He was one who wanted to jam in his stops really, really tight. And he calls me and he's quite upset after the day of trading. And he says, Eric, I just lost, I forget what it was, a fairly substantial amount. I think it was like $800. He says, Eric, I just lost $800 today trading gold. I said, how can you lose $800? I just made $1,000. So here we are trading the exact same market. He loses $800. I made $1,000. Now, admittedly, he was losing smaller. You know, every time he got hit, he would get hit for $100 or $150 or something like that. But the point is, he would take 6 or 8 or however many losing trades he ended up taking. So not only did he get dinged on his trades, but he owed commissions for all those. And even though our commissions are so cheap now compared to what they were 20 years ago, they can still be an expense. Your broker, is going to love you if you trade 10 or 20 times a day, but that doesn't necessarily help your account a whole lot. So I would suggest, try not to strangle your trades. Try to get into this notion of risking a certain percentage of your account. Now, if 2% doesn't work for you, risk 1%. Risk what you're comfortable with. I worked with a fellow, he was trading a $300,000 account. We risked 0.25% of his account. But the whole point of the exercise is that when you get this signal here, if you're a onesie-twosie trader, and I wonder if he's in the room this morning. I'll get him to chime in on this. If you're a onesie-twosie trader, here, let's set this up a little bit better. We're going to set it up like this. Okay, you may have $200 at risk, and you make $200 on the trade because the market goes up. But if you're trading a percentage of your account, there's going to be times that you can get in with 2 contracts, or maybe even 3. I'm still not risking more than I can afford to lose. That's the very important concept to learn here. You don't want to risk more than you can afford. But if this is an amount I can afford, okay, you've won $200. I made $400. If the trade did not work out, yeah, okay, you lost $200, I lost $350. I lost more than you, but it's still an amount I can afford. The point is, when the trade works out, I'm earning more. And by earning more, I can actually end up affording to lose more, right? Because when I win bigger than you do. And this is what people do wrong. Let me see if he's in the room this morning. No, I don't see him here this morning. I'm sure Derek won't mind me dropping his name, but Derek is our poster child for this whole DTS trade manager concept, because if he was here, I'd get him to tell you himself that he used to be a onesie-twosie trader. You know, he traded for like 3 years. He won a little, he lost a little. He won a little, he lost a little. And he didn't make any money until he adopted this whole principle of risking a certain percentage of his account. Now, when he started, he was terribly gun shy. You know, he would put on a trade and it would be like this, and it would be, you know, $400 at risk. He had an extremely tight profit target. He wouldn't even go for the 200 bucks. I think if it was up $50 or $100, he would grab the money. But the point is, he never risked more than he could afford, and he started making more money. He started being able to trade multiple contracts. And it wasn't long. It was within a year that he started trading full time. And now he actually trades other people's money. So he's kind of the far end of the success story spectrum. I know many of you are just looking, hey, Eric, you know, if I can get $100 a day out of the markets, I'm tickled pink. You know, I'm doing much better than my retirement plan. Or I'm just looking to make a couple of bucks so I can take the family on vacation, or maybe buy a new car or a boat or whatever. Andrew says, the signals print when the trend is over. That is one thing you have to watch with the Eagle, is, like I said, we're not trading in a vacuum. You need to take a look at the whole chart, right? Take a look at the whole chart. Looking at this chart, you should be able to see, yeah, this market is sideways. So if we print, here, let's go off this red bar buy. Okay, we print a red bar buy signal. Now you start to, you know, do some critical thinking. You start to do some logistics, if you will. So you shoot your trend line across the bottom here, and it looks like you're bouncing off the trend line. You're printing a red bar buy signal. Now it's, can I make some money out of here before I get into trouble? If the buyers recover this trend, where is the market likely to go? Well, it's likely to test the top end of the trading range. If this trade fails, where's the market likely to go? Well, it's likely to go to the bottom end of this trading range. So that's where I would know if the trade failed 100%, right? If the trade trades below this low, I know without a doubt I'm on the wrong side of the trade. If the trade fails at this point, below this little swing low, I don't know if I just got stopped too early, or if the market's really on the wrong side, or if I'm really on the wrong side of the market. And there will be times you will be on the wrong side of the market. But without a doubt, if the market trades below the lows, I'm on the wrong side of the trade. Now, my profit objective is above or at the very top end of the trading range. What do we know about trading ranges? Well, they tend not to break out, right? As the market gets closer to the top end of the range, they're going to try to sell. As the market gets closer to the bottom end of the range, they're going to try to buy. So to have a profit target at 44.90 is a little bit unrealistic. Maybe I'll choose to try to take profit here, maybe around 44.84. Sorry. Maybe around here. You know, maybe that will be a more realistic profit target. So we're looking to get maybe $100 out of this trade. So how will this work out? Oh, they just kissed it. They just kissed the profit target. Okay, so now we're back here retesting this area. Well, actually, looks like I was a little bit high, I'm going to put that right at 44.84. Yeah, 44.84, I got it. But, you know, even if I didn't get it, let's say my target was 44.85, or even this swing high, 44.86 up here. I'm not wrong until I get stopped. See, if my stop was down here, now I'm wrong. Now I've incurred my $300 or $350 loss, whatever the case may be. And remember, these amounts are relative to me. They may not be relevant to you. If you're trading a $10,000 account, 2% is going to be a $200 hit. If you're trading a $100,000 account, well, you know, you throw another zero on there. Well, you won't be trading 2% of a $100,000 account, but you get my point. Okay, so now we've broken down. So now what? Well, it looks like at the moment the sellers have control of the market, don't they? We're making lower highs. We're making a lower low. So right now I'm thinking, okay, I'm probably on the wrong side of this trade. I need to take steps to try to protect myself. I know the buyers are going to show up somewhere around here, right? As it gets toward the bottom end of the trading range, the buyers are going to show up. Even if this bar turns a little bit more bullish on me, it's still fairly neutral. You see it got up to here and then started backing off again. If I get a bullish looking bar, even while it's forming, what I'm going to do is I'm going to start rolling my stop up. In fact, if I'm getting a little bit anxious that maybe this support area is going to fail, I can take my stop up here now, in which case looks like I'm losing about half, about $170. But let's see if we can't ride this a little bit. Now you see, risking, and I don't know, the market may come straight down here and stop me out. But even worst case scenario, the market goes boom, 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 tags me. Worst case scenario, I have still not lost more than I can afford. Compare this again to the fellow I told you about in that gold example. He had the terrible habit of always wanting to trade 6 contracts. Why 6 contracts? I don't know. But I guess he figured if he only kept his stops $50 away or $100 away or whatever number he was using, he was trading a fairly substantial account, that he could afford to do that. Well, all he did, as I mentioned already, is strangle his trades. He just kept getting himself stopped out time and again. So the sellers are going to try to knock the market down here, then the buyers are going to come back, and when the buyers come back, I'll start to roll my stops more aggressively. So here come the sellers. And it looks like the bottom end of the range is somewhere around here, 44.64, 65. See, we're starting to get a little bit of buying. We're getting some early buying. We get very aggressive buying down here. How do I know? Well, look. Just look at your chart. This is where the market has been stuck since yesterday morning. Don't think for a moment traders aren't aware of yesterday's lows. Or yesterday's range. That would be more accurate, yesterday's range. So now the buying algorithms are starting to kick in. Yes, most of the time we're trading against a computer from a big institution. We're not actually trading against another person. It's just like those Terminator movies. asked, do you use some sort of order flow to determine strong buying? Well, the Geiger counter gives you that kind of info. The Geiger counter watches the order flow, and you can see there was a selling spike here and a selling spike here. No doubt those were around here somewhere. Now see how the dial wings over? Come on, flip back over here. We'll see the buying if the dial flips over here to the green side and holds. That's what we need to see. Come on, get over there. Get over to the hard side. See, when it flips and holds and holds and holds like it was doing there, that shows us more aggressive selling. And as a result, we would anticipate the market to head lower. Oh, there we go. We're holding, we're holding, we're holding. I like to see it hold for like 3 or 4, 5 seconds even. That shows us very aggressive buying. When this dial flips one way or the other and holds and holds and holds, see how it's doing there? We had about 3, maybe 4 seconds of very aggressive buying. The market's very slow this morning anyhow. Normally it's a lot more active. When that dial flips and holds to the hard edge and just keeps holding and holding and holding like it's doing here, we expect some follow through. If we don't get the follow through, that tells us in this case, it's holding really hard to the short side. If we don't get some follow through selling, that tells us that all that selling pressure has been absorbed and that the market will bounce higher. So it's holding, when it holds to the short side, see we're printing a sell signal, or a warning dot anyways. Now we're getting ready to print a sell signal. I would get ready to short that based on the Geiger counter. See, now it's holding to the buy side. Again, as we get closer to the bottom end of this trading range, we can anticipate a little bit more active buying. Now, we don't have a signal here yet. I'm guesstimating that the signal will print if this bar finishes on the low, in which case I have my entry already parked at where the hash mark is going to print. See all the aggressive buying coming in now? So the point is, if the sellers cannot follow through on these spikes in the selling, the buyers have absorbed all that buy pressure, or pardon me, sell pressure, and the market will go higher. The sellers are going to give up, and the market will go higher. See all this buying now? Oh, that was crazy. It held there for like 3 or 4. 1, 2, 3. Just like wrestling. 1, 2, 3. See, it's holding, it's holding, it's holding. That's a lot of buy pressure. So once again, with all that buying pressure, if the market does not move higher from here, see, there it goes. It's starting to move higher. Normally, that's what will happen. We'll see the dial pull over if we get that spike in the buying or the selling. It shows us that the dial was hard over to one side for a while. We would anticipate some follow through. On the occasions, though, that it does not follow through, that shows us that all that buying or selling pressure has been absorbed and the market will actually move the opposite direction. See how they're stacked there and they're trying to chew through all those buy orders? See there, 1, 2, oh, only a couple seconds on that one. Oh, there we go. They're trying. They're really trying. Very, very neutral market right now. So a reasonable short. It is the bottom end of the trading range. I'm not happy about that. I'll leave the trade in. The other thing that you can tell, Andrew, is with the dynamic equivolume bars from Indicator Warehouse, you can tell the width of the candle. So we know that these bars here had very little market participation, but look at when we get here to the 4470 area, we know this is a significant area of support because of all the volume that's going through here. Now you can use a volume chart also, and I guarantee you'll see higher volume on these bars. So we're getting a lot of market participation, and that always happens at the turning points. Wherever the market makes a turn, you're going to see wider bars. That's just the nature of things, right? The buyers have to overwhelm the sellers or vice versa. So we're still flashing a warning dot. I'll leave the signal there. I don't expect it to fill. Okay, I'm going to cancel that signal now. And now here we are with our little eagle scenario, and we're seeing a very aggressive bar. You see this bar here? It had a wick on it, so we knew there was some aggressive buying. This bar is looking very aggressive. At this point, I would probably say, all right, I'll roll my stop down here. If this bar fails, if the buyers don't recover, and I want to try to lessen my risk, my initial risk, maybe I'll take a stop out here. But remember, this is the level down here where you know you're truly wrong. This level here, you're hoping that the buyers are coming back into the market. Now, if we get a couple bull bars in our favor, then I would definitely start to roll my stops. What I'm looking for is something like this, at least a short-term resumption of the trend. So higher bar, okay, time to start rolling my stops. I'll bring my stops in here, and I'll start rolling them up, and hopefully I can get it, you know, maybe to a break-even situation or even for a tiny stop out. Okay, so there's one bar. Let's see if we can get another bar. And again, the whole point of the exercise, and I don't want to belabor this, but it is an important thing to keep in mind. Try not to get yourself stopped out before the market even has a chance to make you money. I was talking to a fellow a little while ago. He has the attitude where he'll take a trade, one trade a day, and what he does is he looks at the market in the morning and he tries to say, okay, well, the market's going to go higher, it's going to go lower, whatever the case may be. He takes one trade and he sets a deep, deep stop, very deep stop. And that's all he does. And he lets the market take all day, if necessary, to work itself out. All right, I'll see now whether they're going to come back here and tag. Break this low, in which case it looks like we took maybe a $200 loss, but still it's a little better. Be 1% of the account instead of 2. And they're going to kiss it here in a second. Then they're going to go down here and check out the bottom end of the trading range. And there they go. All right, so no real decent trade just yet, but just for curiosity's sake, let's see if they can violate the bottom end of the range. So when you have these choppy sideways markets, what do? Well, there's two things you can do. The DTS system isn't going to produce a signal because it's meant to be more of a trend or with trend signal generation. It doesn't produce a lot of counter trend signals, I guess is what I'm trying to say. But what you can do is you can sell the top end of the range, buy the bottom end of the range. So you can throw a limit order in here, say to buy 44.65 or maybe even buy 44.63. Look for a breakout, the market to break out and fail and move a little higher. If you're going to do that, I would not try to hold too long. I would take my profit, maybe look to get certainly a scalping target. The market should give you at least the $50. Maybe try to sneak $100 out of the trade. I would not be swinging for the fences on a day like today. That's option number one. Just sell the top end of the range, buy the bottom end of the range. Option number two, and this is my option of preference, is let the market break out, prove that it can stay out, and then look for your signal. The market will give you a signal. Certainly on one of your tools, you're going to generate a signal. That's no doubt. It's rare I don't think I've ever seen all three birds get shut out on a signal like this. But this is the safer play. Anything within this range, this market is perfectly content to be trading between 44.65 and 44.90. Traders think this is a very fair price for the NASDAQ. So once the market gets outside of this range, then we see an imbalance again, and the market will continue trending higher or trending lower, whatever the case may be. But until then, it's going to be a chop fest, and you need to be prepared for that. You need to realize that not every day will be a trending day. I don't think we're missing anything here. No, not yet. See, still a lot of yellow bars cropping up. I think our first micro-macro cross signal actually followed through. Where is it? Right here, I guess. Yeah. Yeah, 10-2. First micro-macro cross signal. 4-arrow consolidation here. A little bit of a move lower. On these sideways days, I guess it makes sense that the hawk is going to produce more signals. We're probably not going to see a lot of signals on the eagle. But you can see, even from the earlier example, had I taken this long signal, I would still be in the trade by covering below the low. All right, you guys, I'm going to be right back. I think this is a good time to go grab a cup of coffee. It doesn't look like we're missing anything. And I'll be back in just a moment. What did I miss? Not a whole lot. Oh, that's an interesting idea. Mo says here regarding the first micro-macro cross, he says, Eric, I look for the first micro-macro pullback and then get in. That keeps me out of potential bad trades. That's not a bad idea, Mo, especially when the market is days like today where it's a little bit choppy. You should anticipate a pullback. So here's the first micro-macro cross. And because the market is sideways, Mo's absolutely correct in that, we should anticipate a retest of some sort. So the signal prints, Mo actually lets it pull back. I think what he probably ends up doing is trailing an entry. So he probably would get entered somewhere around there, place his stop, and then the market retreats. That's not a bad strategy. When the market is moving faster, however, sometimes, like here's a first micro-macro cross. I guess you got a little bit of a pullback. Here's a first micro-macro cross that didn't pull back, though. Sometimes you're going to be left out. But hey, at the end of the day, it is your money. You have to do what you are most comfortable with. It's not a bad plan, though. I like it. Yeah, like Mo says, you have to have a plan and stick with it. And that's absolutely correct. And the stuff that I point out to you in the room, guys and girls, is stuff that, works for me. If it's not comfortable for you, for instance, running a great big deep stop on a signal, putting your stop way down here. If that doesn't work for you, if you say, well, I'll risk it, but I'll only risk it to here, and I'm going to risk, I'm only going to do a single contract. Hey, do what is comfortable for you. Like I say, it's your money. I'll do my best to steer you in the right direction. And I certainly don't, I know sometimes I get up on my soapbox and it sounds like I'm preaching to you guys, but really I don't intend to. One thing I know about trading, it can make you look very foolish. So whenever you think you've got it all nailed down, that's when the market's going to turn around and give you a little schooling, a little lesson. All right, so it looks like we're getting a little bit of an uptick now. First micro-macro cross higher here on the hawk. How big is our range? Do I have enough room in here that I can actually try to get in on this? Yeah, actually the top end of the range is going to be here around this 44.86. Working on a possible trend change signal here with the Falcon. Chances are pretty good that if this bar prints on the high, we're going to produce a buy signal. We've already had 2 warning dots. On the rarest of occasions, the Falcon can produce 3 warning dots. And again, because the range is so tight today, it might be more prudent to take an early profit. So far, so good. So the market getting pulled back toward the top end of this trading range, that's where the sellers are going to be interested in selling. You can see the width of these bars. Not a whole lot of active selling going on there at the moment. And do we have a scalp target? Yeah, we've got our scalp profit right there. Actually, that would be the thing to do. I'm going to tighten my profit objective. Not quite a scalp, kind of in between. Go for 15 ticks instead of the 20. And I'm not liking the hesitation here. But again, it's that type of day. You gotta kind of sit on your hands a little bit. The market is going to flop around some. If we see them win this bar, if we see the buyers win this bar, well, we'll hit our profit objective to be sure, but we could see a little bit of a rally. Oops. Aha. That's why we have the hesitation there. So I guess that scalp target would have been a good idea. Just get our scalp profit. When the markets are sideways, it's advisable to try to tighten your profit objectives. Come on, one more time. Let's get up there. Here, get a little. There, I'll give you a little help. Get up there. Most nice nudge, Eric. Yeah, here we'll help it some more. There we go. We hit the break even. Oh, they kissed the break even, but they didn't hit the profit target. Come on, get up there. Get up there. Come on. Don't fail now. You stinkers. Get up. Come on. Oh, they're going to tap me here in a second. Oh, well. A break-even trade's not a bad way to go out. So that's to be expected. You get to the top end of the trading range, we're going to see some selling. You get to the bottom end of the trading range, you're going to see some buying. Not a whole lot of activity going on today, though. The buyers might be getting a little bit stronger, though, I have to say. The sellers, let's see, which one's going to show it the best here? No, not the Eagle. Oh, by the way, we would still be in our Eagle trade, wouldn't we? We were long here. We covered down here. See, it's not a loss yet. We'd still be long. You could bring your stop in somewhat as this market started to advance. You could bring your stop in a little bit more aggressively if you chose. Maybe we'll see it here on the Hawk. Yeah, the Hawk doesn't show it too badly. So, sideways market. Bears try to make a press lower. They fail, which is to be anticipated. Bulls are starting to press. Now we'll see whether or not they can actually recover it. I'd love to see a macro pullback signal through here, or perhaps a 4-arrow consolidation. I guess technically this is the first micro-macro cross. This one fired on a gray macro line. Or it was just turning over. Really, really close call. You could consider this your first micro-macro cross, however. I would not argue. But if we came back, say, with a little bit of a macro pullback or a 4-arrow consolidation, that would be a good buying opportunity. Not that I necessarily know the market's going to go higher, but I do know if the buyers are serious about following through on this rally, they've got to step up, right? They've got to come in here somewhere and rally the market. Here on gold, we're getting this is the gold eagle. We've got a rule of 3 signal. And it's only 2 signals against the hard edge, but we have that telltale test of the extreme. Oh, and we got a chance for a second push on the entry. So this is going to allow me to enter above the high of this bar, and I'm going to cover below the low. So we're looking for a push higher. Again, the market kind of sideways. The gold market looking a little bit more fluid, but still not really trending. Not what I would call a trending market. See, very, very sideways. So I'll probably go with my regular profit objective. Okay, it's down there. I got a chance to maybe change this real quick. Ooh. That was close. they slipped us a tick. Let's see if I can get one tick back. You can see my break even is up here, my preset for my break even. I'll roll it in so it's about 3/4 of the way to the profit target. The reason I'm leaving my stop deeper is, well, we've got a little bit of a downtrend here. Yes, we've made a higher swing low, but traditionally we see 3 of these counter trend signals before the market reverses and heads higher. At this point, I only have 2. So there's a chance the market may try to drift down one more time before recovering and heading higher. So I'm allowing for that possibility. And let's see, we had something brewing here on the NASDAQ. See if we get that macro pullback. Pretty please. No. Possible cloud crossover here in the Raptor. We did get a trend change signal here on the Falcon, and there's our macro pullback signal starting to produce. I could probably risk that one to there. Oh, gotta bring it in a bit. $44.80's been a popular number today, hasn't it? Okay, let's see if we can't get our scalp out of here. Come on. One, two, three. Oh, we might get one more signal. Here we go. Come on. You can do it. Get up there. Oh, whew, that was hard work. All right, so a fairly reliable signal. As we had a pretty good idea the buyers would have to try to push through on that if in fact they were going to maintain this uptrend, and it looks like we're getting some follow through now even as we get back toward the top end of today's trading range, where we can anticipate the sellers to get a little bit more aggressive. So here, I very rarely do this. In fact, I'm not even going to do it on this one. Oh, sure. Here. You know how I was telling you about buying and selling the top end, or selling the top end of the range and buying the bottom end. Now, I wouldn't normally do this with 2 contracts. I'm just going to do it with 2 contracts because, hey, we're in the room. So what I'm going to look for here is, I know the high of the day is 44.86. I'm going to short 44.86 $. In other words, I'm going to look for the market to break out, and then I'm going to look for the sellers to just get all nasty on them and jump all over them as the market tries to make a new high for the day. And when you do this type of thing, again, you need to be more aggressive on your profit objectives. And I'll run a 20 tick stop. With my fixed tick strategy, if I get a fill. All right, so now I'm going to look for the sellers to start jumping on the buyers here. Anticipating that this trading range is going to hold. And like I say, I don't do this a lot. The DTS system actually doesn't produce signals this way. Oh, we got a cloud crossover signal right here. Oh, sorry. Missed that one. All right, are we going to show a profit? So I'm looking for just a scalping profit. I've got 2 contracts in place, so if it hits $100, I can get rid of the break even. There's my scalp target. Oh, sorry, that's just a single. All right, and oh, sorry, I did that wrong. Sorry, my mistake. What I was looking was for a, there we go. That's where I hit the profit target. I popped out just a little bit too early. But that's how you would trade a range. If you suspect the market is in a range, you don't expect the breakouts to stick. So you try to sell the top end, you try to buy the bottom end. You see it broke the bottom end, or this morning's lows, broke, retreated. Broke the high, retreated. Now it's a viable strategy if you suspect the market is in a trading range. Oops. But you don't want to get too crazy expecting the market to make, a full-blown reversal and get down toward the low of the day. May well happen, but it's really the type of day that you just want to go in, grab a couple of ticks, get out. Our cloud crossover signal, though, was certainly profitable. It was enough to hit our profit target and at least get us to a break-even position on the remaining contracts if you had more than one contract in play. Okay, so now we had a little bit of a breakout. We're watching the retest of that breakout. We're going to see whether the buyers are going to recover this market now or not. Oh, 2 macro pullbacks already. That's sad. We normally only see 2 macro pullbacks within a trend. This one still owes us a retest of the high. So it's doable. I would probably dial down the risk amount a little bit here, or maybe just throw a onesie on. I wouldn't get too crazy with it. Try to risk it as deep as I could. Maybe go for a second push on the signal. Anything I could think of to try to keep myself on the right side of the trade. If this fails here, it's going to try to get to the bottom end of the trading range, so my stop could be a little bit too tight. If I get a couple bars moving in my direction here, I'll probably get more aggressive with my stops as well. There we go. I'll give them the swing low. That's it. Get up there. So what we're watching now is we're looking to see the market retest the highs. If it manages to retest the highs and continue higher, well then we can say we're in an uptrend today. and we can look for buying opportunities. Otherwise, it will fail, in which case we will remain in sideways chop. Come on, you can do it. While we're letting that sort itself out, I'm just curious about this eagle trade from this morning. The one that we were watching, if we gotten to the profit target yet. No, not yet, but close. Made a good effort right there. So you see, sometimes half the battle to making a profit is just trying to stay in the trade long enough to make a profit. We're all so anxious as traders, aren't we? Well, we hit the break-even trigger here, so now she's got to go. As traders, though, we are all so impatient. Ray Burke always used to make me laugh because he was the poster child for impatience. Ray is a through and through type A personality. Let's go, let's get her done. Daylight's burning. He would never like to see the market pause. If the market was taking a long time to get to its objective, like this bar is right now, he would punch out. He would see that as a sign that there was no follow-through. And it could be. Sometimes the market just needs some time to sort itself out. It's very likely just a very low volume bar. See, volume was 5 contracts on that bar. 13 contracts, I think, when it closed. Oop, no, there the volume's up. Now it closed just shy of 1,500 contracts. But as it was forming, the volume was very, very low, which is why it didn't want to go anywhere. Okay, so hooray for us, a nice little macro pullback signal there. So a rather subdued trading day today, but still some opportunities around. Here is the gold eagle the golden eagle we were watching, and now we do have a proper rule of 3. If I wasn't already long from here, this would be a good bar to try to get long at. I'd probably let well, you could take it on the hash mark, sure, why not? Or you have a chance for a second push on this one, so you could take it above the high of this current bar. Cover either below the low or below this swing low. There is a chance, the rule of 3 is a counter trend signal, there is a chance that this may be become like a bear flag type formation. So obviously, if it breaks down through the bottom end, you might want to get more aggressive with your stop, or maybe give the buyers one more chance to recover the market if they don't rally it from this point right here. So we'll be nursing that trade for a little while, I think. did happen to take an early eagle signal and you find yourself in this type of situation, now might be a good time to get your trade at least to break even. The market has made several commitments to push higher. We're at the top end. If it fails at this point, well, you may just want to take profit. It looks like there's about probably $140, maybe $150 in open profit there. Otherwise, break even or break even plus 50 bucks, not a bad way to go. At this stage, I would not be prepared to keep this stop way down here. All right, getting a little bit more active selling at the top end of the range. Here we are again. If we come and the Raptor produces a sell signal here, that would be a soft edge sell. It might be worth attempting. Where's the middle of the range? Somewhere around 44.77, 78. Could see a retracement back to there. 79.80 is our hard edge on the band. A retracement to the hard edge, definitely plausible. We gonna get a signal? No, not yet. Certainly the type of day you can trade both ways. And here's that soft edge sell now on the Raptor. This is a little bit of a gamble. I'll put it on just because we have nothing going on here. But not what I would call a high probability trade. I'm just looking, oops, what happened there? Oh, that wasn't very bright. I deleted my orders. Okay, well, we'll just have to manage this manually now. So I do believe my profit target was somewhere right around there. And I'll run a visual stop. I'll just close the trade if we stop out above the highs. So I'll start with my trade right here. Note to self, when you're in a trade, don't touch anything. I'm so used to deleting my drawing lines that I mistakenly deleted my trade. So I'm short from around here, just looking for a retracement to the hard edge. We've had our retest of the high. So once we get the retest of the high and we get that lower high, the market is going to try to test the lows. That's where we're at right now. We're still live. Come on. See, 4480. Remember that number, folks. That's going to be an influential number for the next few days, 4480. Come on. So a little bit of buying going on here on the lows. If we can just see it break through this low, just a couple more ticks. What's the low of this bar? 44.83. So we need to see somebody tick 44.80 half, 44.80 quarter. That's going to send some of these buyers scrambling, and we should see the market at least make a little bit of a move lower. Again, not a full-blown retracement, but down here to 44, that looks like 77 half, 44.77 half. I would be happy anything around the 44.78 area. Okay, so you see the width of this bar? That tells me there was a lot of buying and selling going on that bar. We've broken now, and we're profitable. Just looking to pick up a little bit of a scalp profit. Come on. Sitting on that hard edge now at 44.80. Come on. You know you want to. Oh, almost there. So a lot of activity going on these two bars right here at this low. 44.79 3/4, essentially 44.80. Okay, one more little hiccup before it tries to move lower again. Folks, I'm going to close up the room just a few minutes early here today. I've got a meeting, an online meeting at the top of the hour. So we're going to button up shop for the moment. If you are going to trade this afternoon, I think you can expect more of the same. I don't know if this is an early prelude to tomorrow. Going into the holiday weekend, I expect the market to give us much more of the same. At any rate, be careful. If you can grab a few dollars here and there, go for it. I don't think we're going to see any real big home run trades today, though. All right, we'll talk to you tomorrow then. Bye for now.